What is an ARM, adjustable rate mortgage? So anytime over history that I've been in the business since 1995, anytime rates start to rise, ARMs, adjustable rate mortgages, start to poke their head because people want the best rate possible. I mean, I get it. So this video is going to talk about what an ARM is and what it isn't. So should you do an adjustable rate mortgage? So ARMs are, we're going to use the word ARM in this video. ARMs are where the interest rate is fixed at your start rate for either 5, 7, or 10 years are the most common, okay? There's really no other ARMs. There used to be 1-year and 3-year ARMs, but those went away in 2008. So 5, 7, or 10 years. Did you know that the average time in a house, statistically proven, is 7 to 8 years? So I like the 7 and the 10-year ARM. It just minimizes the risk from the adjustment. So let me tell you how the loan is going to adjust if you got into an adjustable rate mortgage. So let's say your start rate was 4. So let's just say you're on a 7-year ARM. The rate is 4%. So after the 7 years, which is after 84 months, your rate is going to adjust to an index plus a margin. So what is an index? Well, there's many of them. So in the beginning of the loan, when the lender discloses to you, they're going to disclose what the index is. And you can look online at the history of this index. So there's the CMT index, there's the LIBOR index, there's the Treasury index. Those are the most common ones that I see. So that index, whatever it is after the 84 months of your change, it is going to be that plus a margin. So again, the margin is disclosed at the time that you start the loan. So 2.75 is a common margin that we're seeing right now. So let's say that the index at the time of the change is 1%. The 1% plus the margin of 2.75% means that your rate would be 3.75% at the time of that change in the future. But wait. Many lenders are saying, okay, if the combination of those two numbers is lower than the start rate, which was 4, we're going to default to the 4%. So you've got to really read the details. Every lender is different. Every product is different. So I'm giving you some basic criteria and some lingo for you to know what to ask, what to not ask. So again, let's say we're 84 months from now, index plus margin is 3.75. Your minimum rate was 4, so we're at 4%. You're right where you started. Now, how much does it adjust? That's also determined in the beginning of the loan that you need to pay attention for. So the common adjustments are either 6 months, 1 year, or 5 years. So it depends. So it'll either adjust, let's just say it's the 1 year. So that loan would be fixed for the 7 years. Then it would adjust every 1 year after that to that index plus that margin that we talked about in the beginning. Now, this is a lot of detail, I realize. You want to also ask the lender if you're considering an ARM. There's usually a 2 to 3 page disclosure that comes with it that you can read up about it. So this video is just meant to be a shortcut for you to just understand the basics. Now, there's one more thing I want to mention. There are caps, there are limits to how much the interest rate can rise on the changes, and then also the lifetime cap. So most lifetime caps are about 5 or 6 maximum percent. What that means is, again, we'll use the example of the 7-year ARM with the 4%. If you have a 5% cap, that means your rate could never be more than 4 plus the 5, which is 9. So if for some reason you got to year 7 and the rates were just like horrific, and the rates were 18% like they were when my parents were buying houses, like true story, you're capped at 9. So you're like you're sitting pretty at your 9%, super happy at that time. So for the most part, people will use the 5, the 7, or the 10-year ARM with the intention that they're not going to own the house in that amount of time. So make sure you talk to your lender. If you're in Texas, call me and discuss if this is the right product for you. It is not for everybody. It depends again on how long you plan on being in the house and what matters to you most. So again, some clients go right to the 30-year fixed, some like the idea of the ARM or the adjustable rate mortgage. Please like, share, and subscribe. We've got tons of other videos. We've got over 300 videos on my site about rates, closing costs, programs, anything you can think of. If you're in Texas, call me. Talk to you soon.